Internal control, what is it? Internal control refers to the policies and procedures used by a company for three purposes: increase efficient and effective operations, create reliable financial reports, and finally, following laws and regulations. What's the point of it? Internal control is needed to restore confidence into reports and the business operation due to increased accounting fraud. All businesses have internal control. However, the key is how powerful it is. Any good internal control contains 5 components. Firstly, it has a control environment. This is the overarching atmosphere where members do their activities and follow their responsibility. Like any environment, external factors can influence it, such as ethical values. If the environment is not well established, then the internal control will fail. The second component is risk assessment. This is the ongoing process of identifying and analyzing risks from the environment that may affect the organization's achievement of objectives. These risks can be internal, such as theft of assets, or external, such as new competition. Once risk has been identified, you must firstly establish the significance of the risk, figure out the chances of this risk occurring, and finally consider actions to maintain the risk. Level of significance will depend on the level of attention. Somewhat, we do a similar process in life when we make decisions. The third component of internal control is control activities. These are the actual policies and procedures used to maintain the risk. These are broken down into 5 parts. Establishing responsibility. This allows for accountability and who to contact if they fail to complete it. Maintaining adequate documentation. Reliable accounting information is free of error. Thus, practices such as multiple copies and document sale invoice are key. Segregation of duties. This refers to spreading the responsibility of tasks among multiple employees to prevent malicious activities from one employee having too much control, and a means to check one work against another. Physical security. It's the idea of guarding against loss of assets or designs to detect loss of assets. And finally, independent verification. This refers to someone reviewing and reconciling information within an organization. The most effective way is surprise basis, and the person checking is not connected to the process or employee being checked upon. Information and communication is the fourth component of internal control. Relative information should be openly flowing in an organization. In any group, good communication is key. Monitoring is the last component. This refers to the assessment of the quality of the company's internal control by ongoing activities or separate evaluations. Both ways ensure continued monitoring.